Welcome to session 4. In this session, we are going to discuss about microfinance and how it is enabling economic development. So what are the basics of microfinance? Whenever you're talking about microfinance, microcredit plays a very important role. What is a microcredit? Microcredit is provided to a small scale businesses or poor people to engage in any business activities. So second basics of microfinance is micro savings. Okay, so micro savings also helps provide creation of a savings among the lower income group. Third one, micro insurance provides insurance for potentially lower income group which are not protected by other insurance companies. And last one is remittance maintenance. Whenever a transfer of money is done through mobile phone, the microfinance plays a very important role. Okay, what is the aim of a microfinance? First and foremost, the aim of a microfinance is to reduce poverty through financial inclusions. Microfinance provides a short-term loans through which poverty can be reduced. Second most important aspects of a microfinance is raising the domestic savings in lower income group through a small savings like 10 rupees, 50 rupees, 20 rupees based on the earnings income. Third one is protection against income changes or insurance against income changes through which how the small savings they also provide them small loans for meeting the daily expenses. And fourth most important one is sustainable finance for new enterprises. The microfinance provide new finance for small self-help groups and micro and small businesses. And last one, the most important aspects of a microfinance is gender empowerment. Here, majority women are empowered through microfinance. So, what are the key features of a microfinance? First is they lend to poor, okay, or lower income group. Third one, microfinance do not take securities, so it is easy to borrow. Third one is prefer savings over borrowing. Microfinance purpose is to create savings over borrowings, and it is short-term loans. They provide short-term loans between 1 day, 2 days, 5 days, 10 days, or maximum of 1 year. It covers covering the interest as well as the cost, and it is normally loans are provided in a group appraisal or guaranteed, and preferably the majority of the customers are women over men. Okay, what are the pillars of a microfinance in India? Okay, it is a niche market. It is targeted to a specific market, and other major players like ICICI Bank, others also are providing microfinance. Okay, state-owned commercial banks also provide microfinance in India, and other micro development strategies also has been implemented in India for development of lower income group, and NABARD and SEBI also. Small Industry and Development Bank of India also provide microfinance for the enhancement of small and micro enterprises. What are the major players in rural markets? We have a major players in like public sector banks, regional banks, scheduled banks, cooperative banks, mutual funds, NGOs, private equity, and private banks. These are the major players in rural bank providing microfinance. And microfinance in action, because of microfinance, 2.5 billion people sanitation has been improved. Okay, who are the regulatory bodies in India? NABARD, NGOs. NABARD is a major organization for self-help groups and microfinance. Microfinance task force was set up in 1998 to monitor, and RBI also monitors non-banking financial companies in microfinance. And self-help groups has majority got benefited from the microfinance. Now, what is the credit risk? And these are the major credit risk of microfinance. And these are the other risks like operational risk, business promotion, lack of literacy, divestment, regulatory issues are major issues in any microfinance. Thank you.